In this video, we'll be covering the S&P 500, gold, and Bitcoin against the US dollar. We're going to break down what's happening on the charts, identify the key levels to watch, and share what we expect going forward. So let's get right into it. We'll start with the S&P 500. Looking at the daily time frame, the S&P 500 is currently at a major support level around the 6,567 price region. This level has proven to be significant multiple times in the past. If you go back on the chart, you'll see that on September 11th, 2025, price broke above this region for the first time. Then, just a few days later, on September 17th, we saw a clear retest of that same zone, and it held firmly as support. It was tested again on September 25th, and most recently, we saw another bounce from this level on October 14th. Now, price is once again revisiting this region. Given how well this level has acted as a demand zone, we are expecting it to hold up again. But that's not all. If we turn on the 100-day moving average, we can see that this 100-day moving average is also lining up right around the same level, which adds a layer of technical confluence. When both horizontal support and a key moving average align, it increases the probability of a bullish reaction. So going into the new week, I'm expecting a bounce to the upside from this 6,567 area on the S&P 500, at least in the short term. We'll have to monitor whether that bounce turns into a sustained move or just a temporary relief rally. Now, let's move over to gold. On the 4-hour chart, we can see that gold has been trapped in a tight consolidation range over the past several days. After reaching a new all-time high at $4,390, we saw a bearish pullback. Then price attempted to recover, but has since been moving sideways with no clear direction. This type of choppy price action often leads to stop hunts before the market decides on a stronger move. So what should we expect from here? Well, my bias on gold remains bullish for a few reasons. First, we may see price sweep liquidity below the current range. That is, take out some stop losses sitting below, and then continue higher. This is a common move when the market is preparing for a breakout. Second, we have the fundamental outlook. There's growing anticipation of a Federal Reserve rate cut, possibly in December. If this narrative gains traction, it typically weakens the dollar and drives capital into safe haven assets like gold. So, in the coming days or weeks, I'll be watching for a bullish breakout on gold once the market finishes this range-bound phase. Now, let's take a look at Bitcoin. We're on the weekly time frame here, and Bitcoin is currently trading around the $86,000 level. From a technical standpoint, if we apply the Fibonacci retracement tool from the major swing low to the recent high, we can see that Bitcoin is now resting at the 0.382 retracement level. This is a key zone where buyers often step in, especially during corrective phases in an overall uptrend. Given this context, I'm expecting a short-term bounce from this level. It's not yet clear whether it'll lead to a full reversal, but this zone often acts as a base for recoveries. Now, let's talk about liquidations, because that gives us more insight into what traders are doing. Over the past 24 hours, around $212 million worth of Bitcoin positions were liquidated. Out of that, about $83 million were long positions, and around $128 million were shorts. That means more shorts got wiped out, and when you see short positions getting liquidated like this, it's often a sign that the market could push higher. It creates the condition for a short squeeze, where trapped sellers are forced to buy back at higher prices, which in turn pushes price even further up. In summary, here's what we're looking at across the board. On Bitcoin, when you combine that liquidation data with the 0.382 Fibonacci support zone, it strengthens the idea of a potential bounce coming soon. On the S&P 500, we're at a critical support level with the 100-day moving average in confluence. I expect a bullish bounce from this 6,567 zone. And on gold, we've been consolidating, but the bias remains bullish, especially with the potential for December rate cuts fueling demand. As we head deeper into November and get closer to December's policy decisions, the next few weeks could be very active across these assets. Thanks for tuning in. Don't forget to like and subscribe for more updates like this one. See you in the next video.